South Africa's second biggest pharmaceutical company, Adcock Ingram's interim headline earnings per share slipped 1% to 221 cents. Revenue gained 13% to 2.2 billion rand, reflecting the impact of the acquisition of Ghana's Ayrton drug manufacturer, as well as the conclusion of various co-promotion and distribution agreements. On that note, Simon, SWOT analysis.
Market cap 10.5 billion, price earnings 17.6, dividend yield 3%. That's taking into account the numbers that came out today. Turnover was up 14, as Elaine said. Travis, let's come to you first. I mean, let's first start with the issues. National Health Insurance, Consumer Protection Act. These are two pieces of legislation, maybe less Consumer Protection Act and National Health Insurance down the line, but certainly something investors need to have on their radar, because certainly Adcock Ingram have got them on their radar.
Yeah, definitely. You know, this is something we're going to talk about again in Medi-clinic later as well.
Yeah.
You know, this National Health Insurance. You know, from my view, it's going to be difficult to buy the stock on the basis of that. We're going to wait and see what the outcome is. It could play in the favour of Adcock. You know, more deals, more tenders for it.
But uncertainty is what we got right now.
Very much so.
I've heard the phrase before: as an investor, we can price risk, we can't price uncertainty.
Exactly. No, it is going to be very risky for Adcock and any of the pharmaceutical companies.
Johny, a very good day to you. Let's take a look at the ARV allocation for Adcock Ingram. Many saying very disappointing. They're only getting 4% or so by value. Is this disappointing for you? Did you expect a bigger number?
The ARV tender was actually announced sort of November, December last year. So, and you would have recalled that Adcock came off quite hard back end of last year. So the actual numbers today weren't a surprise, given they sort of almost pre-released that number.
Well, with regards to the fact that they only got such a small part of that, I mean, do you think that Adcock Ingram needs to push to get a bigger stake, a bigger piece of the pie, Johny?
Look, it's all about margins. The tender that they got last year was actually very healthy margins. What the guys are getting this year, largely Cipla and Aspen, is actually at a slightly low margin. So it really all depends on what kind of margin they can get out of this business. On the long-term basis, it's more of a sort of a public good that they do for the public sector. They get much higher margins in the private sector ARV, and that's probably where they want to be focusing their efforts.
Frank, I want to bring you in. One of the things which has certainly helped these guys is stronger rand. They're importing a lot of their drugs, which they then sell on. In a sense, though, can we price that in? Can we say the rand is going? I know Chris Hart will say 6.50. In fact, he'll even say as much as 6. Is that something we can reasonably say that they're going to continue to, in essence, get that pricing power with the currency strength?
Well, sure, if the rand stays that way, but calling currencies,
you're not going to put your head in the block over the currencies
is an absolute nightmare of monumental proportions. But I think what's interesting with this company is they want to expand significantly into Africa, and I think that's where the big growth lies.
They've got some Ghana, they've got some Kenya, but they're talking a lot more broader. They're talking emerging markets.
Yes, but future expansion into Africa, I think, is where the substantial growth is going to be. But I don't really like this company because, looking back at earnings history, earnings have been slightly down. It's going nowhere. It's sort of jumping.
Looking back at share price performance over 10 years.
Well, it hasn't been listed for 10 years.
It came out of Tiger.
Yeah.
It's only been listed. It's only been listed a short while. It's up 80% since it listed in 2008, which is terrible. So from that point of view, I think that they're going to battle to just move forward in terms of earnings with margins. The interesting thing is going to be what comes out of their expansion into Africa, and I think that's they've been hurt by suspended products. They've been had a lot of headwinds that they've had to run into and endure. So I can't see them growing their earnings significantly enough to justify a substantial upside in the share price.
Johny, I want to come back to you in Cape Town. I mean, one of the risks of pharmaceuticals, and they announced it back in April and confirmed it, Medicines Control Council basically made them withdraw some of their drugs, and I'm not going to say the fancy name, acronyms DPP, 200 million that they do revenue in 6 months. Certainly that's always going to be hanging out there. You get a drug out there, not just to withdraw, but potential litigation coming down the line.
Yeah, I mean, that was quite a big knock that they took on the DPP. It'll hurt them in the second half as well. It is something that they are taking or appealing with the MCC to see if they could try and get that product reinstated. I guess the other issue is also on the international benchmarking, where the government's looking at trying to regulate some of their prices. Generally, I don't think they face too much risk of more products being removed other than the DPP, which they're appealing, and then some combination drugs, which have been under a cloud for some time.
Well, Travis, it's quite an interesting point. I mean, listening to some of the commentary coming through from Adcock Ingram, they are appealing the process at this point in time, and also saying that overseas, on the international market, it's an OTC a medical treatment, DPP that is, and here in South Africa it's a Schedule 5 drug, so they think that they
Schedule
could win.
6, I think.
Schedule 6 perhaps, yeah. They think they could actually win the case. Do you think that that's
well, you know, where
perhaps
do you
in the
go
cards?
from? In December you had losing some of the tender, only 4% from 21. Now in April you have this 3 months withdrawal on this drug, 200 million. You know, I think there are better stocks out there, you know, better pharmaceutical stocks to buy.
We haven't even touched on single exit pricing.
Yeah,
yet,
you know, there's a whole lot of different things that we're looking at, and if we're taking all the negatives, you know, pros versus cons, you know, I'm a bit worried about Adcock.
So in other words, not hot for you?
Not hot for me. I'd look at other alternatives. Cipla would be my bet, just the price, or, you know, looking at a bigger stock like Aspen.
Okay, Frank, I mean, you seem like you're kind of excited about the Africa expansion. Does that make it hot for you?
No,
or warmer jaw?
it makes it not hot.
Not
Well,
even warmer
the
jaw.
Africa stuff would be hot, but that's in time to come. But I'm not going to buy a share now for something that's coming way down the line.
Okay.
You know, so it's with its current performance and you know, the regulatory issues that are coming up, and not hot.
Okay, Johny, hot or not?
We took it at listing, but at these levels, it looks quite expensive. I think they'll struggle in the second half. Earnings will probably go back again, so not hot for us either.
So you took it at listing. Does that mean you're selling out of the company now?
No, we sort of sold out
Really?
almost sort of 6-12 months ago.
Okay, let's delve into the next stock, and we're looking at South Africa's second biggest hospital group, Medi-clinic. It posted a flat full-year profit as robust performance at home was offset in part by the stronger rand. Diluted earnings per share totaled 176.3 cents in the year to the end of March, up from 172 cents a year earlier. Revenue rose 9% to 18.6 billion rand, with its Southern African unit lifting sales by 12%. But of course, we know that core headline earnings per share, I think, increased by around 20%, if I'm not mistaken.
Yeah,
Simon.
and a market cap of 18.8 billion, price earnings 12.9, dividend yield 3.1. John, let's come to you in Cape Town first. It's something which is not new to the balance sheet, but 22 odd billion debt. I know 18.5 of that is ring fenced and it's offset by assets in Switzerland and the like, but still that is a humongous chunk of debt, $1.5 billion in finance costs every year.
Look, the debt is quite large, but you have to sort of put it in context relative to something like a Netcare. Medi-clinic, their Swiss operation, covers that finance charge that you mentioned by about 1.5 times. So there's quite ample cover there. If you look at Netcare's result, which were out sort of last week, their operating profits were actually below the finance costs. So I'd be a bit more concerned around Netcare's debt than Medi-clinic, which seems to be quite nicely covered.
I chatted to the CEO a little earlier today, Johny, the likes of Daniel Mainkies, and saying that he's relatively concerned about the changes in regulation coming through in Switzerland. It's a very big unknown for the company right now. Is this a concern as well for you?
Look, I think all healthcare stocks operate under a cloud of regulation, and I guess Medi-clinic has that on both fronts now, both Switzerland and South Africa. And it is something that we're monitoring. The Swiss have tended not to sort of institute sort of industry breaking regulations, so we wouldn't expect them to be sort of too harsh on the private hospitals.
Travis, one of the things, when they're split between South Africa and Switzerland, pretty 50-50 almost in a sense, quite a nice split, better margins in South Africa, I suppose we can expect that, but kind of gives them a bit of protection and a proper level of diversification. It's not as Frank was saying earlier about Adcock, you know, the want to get into Africa. Yeah. They've got that nice split.
Yeah, I think, you know, for a client, if you're looking for a stock that's got offshore exposure, not in Switzerland, but in Dubai, I think, and also Namibia, which offers great, but then let's look at the rand price. How's that going to affect?
Well, I mean, and that there it comes into. I mean, it's
that
debt's getting more expensive. The money they bring home.
You know, also, we spoke about regulatory issues in Switzerland. That's a major concern. But let's look at locally. They've also got regulatory issues here. You know, we've got NHS, you know, the NHR, which is coming through.
Yeah, NHR.
Yeah, NHR.
National Health Insurance.
Yeah, that's one. And, you know, so there's a lot of problems that they're faced with. But I think, you know, overall, it's still a good stock, and, you know, they've got some good potential.
And it's interesting, we've spoken about Medi-clinic before, and a lot of these companies, and perhaps not only having that medical offering, Frank, but in a sense also sort of the property side of things as well.
Yeah, look, there's a nice mix there. I personally think this company is in pretty good shape. It's I like their future prospects as well, which is basically what I always do when I analyze a company or when a company's brought out results, because the current results are in the share price. You can be pretty sure of that.
That's the
So the first thing I do is I go down to the bottom and I look at future prospects or you know, or their you know, their opportunities that are coming up, and you know, they've had a rights offer which is going to finance, you know, their debt and growth in Switzerland and things like that, which is pretty good. They've got a whole lot of new hospitals planned that are going to come up in Centurion, Stellenbosch, Kimberley.
They're doing huge upgrades. I mean, I got a list here. I'm not even going to try and run through them all. We're running out of time. But I mean, left, right, and centre, they're bringing on additional bread all over the place.
And they plan to continue to do this.
Yeah. So for the future, this company is looking good.
But they left the dividends unchanged.
They left dividends unchanged, which is a bit of a sort of an issue for now. But you know, looking forward, it's let me do my little thing. Let's look back and let's look forward. Okay, looking back, the share is up 360% in the last 10 years, which has outperformed the JSE. If you'd bought it in 1991, it's up 3,600% since then. So that's a real star performer in a in a long period of time, if you've got that much time to play with, which I don't. But in the last 6 months, the share price is flat.
Yeah.
So that's the problem. In the last 6 months, it's flattening out. So it's not looking too good from that point of view. The headline earnings per share over the last 5 years, up and down, up and down. The net asset value down in the last 2 years. So there are some worrying factors there. So I would want to see that, you know, that future promised growth come through first of all. But right now the market is saying it's lukewarm, it's flat, it's warm, it's not hot, it's not cold, it's sort of in somewhere in the middle.
So where have you decided? Somewhere in the middle?
Yeah, warmer draw.
Okay.
Warmer draw.
Travis.
Well, from my side, if I look at it technically, Frank was speaking about it, it's flat since October. It's tried to bounce above $30. It didn't do it today. It's sitting at that range. So if you're a client who's got it, hold it. If you like the dividend, if you like the opportunities and growth, if you're a new client, let's look at something else.
Yeah, and I must just say, from a technical point of view, I agree with Travis completely. It's technically, it's looking horrible.
Johny, your view on the dividend, and it seems that it has been something the company has said that for the next couple of years, this is what their strategy will be, and they're going to take a conservative stance. Is this a concern for you, and also hot or not?
No, look, I think they flagged the dividend for some time, so I don't think that would be a surprise to the market. On a fundamental basis, I think the stock will make sort of 200 cents of earnings for FY12, even higher if the rand begins to weaken from here. Also, they've got, as we mentioned, quite a lot of debt in Switzerland that hasn't been tax deductible. That will start to be tax deductible from next year. So that will sort of give them more sort of operational and financial leverage. So we like the stock at these levels.
So hot for you, Johny?
That's correct.
Simon, hot or not?
No. Switzerland, Europe, you know what's happening there, all that crisis and stuff. If I'm going to buy a hospital, and I'll do that perhaps when I get a little older, Life Healthcare is probably my pick.
Johny, we're going to be saying goodbye to you in just a little while, but if we could get your hot stock pick, what stock are you looking for at this point in time? What is the hottest pick for you?
I guess there's a couple. You know, we've previously mentioned on this show Old Mutual as a recovery play. Investor came out with the results this week as well. That's also another sort of beaten down financial which we'd be looking at. Medi-clinic we like. If you don't like the offshore exposure, I think Life Healthcare is sort of an equally good hospital group in South Africa. They also had very good results. So I think out of those four stocks, those would be our picks.
Wow, fantastic. Simon.
Quartet.
Yeah, absolutely. I asked for one and we got four. Thank you so much, Johny, for joining us on this edition of Hot Stoxx. Much appreciated. Johny Lambridis from Element Investment Managers.